Hey everyone, so let us talk about something big, something that is probably on a lot of your minds right now. We are staring down what could be a pretty gnarly market crash maybe in 2025 or 2026. And honestly, if you play your cards right, if you really listen to what I am about to tell you, this could be your moment to actually get ahead, to get seriously wealthy. I know that sounds wild, especially when you see things bleeding. Just today, at market open, one of my Bitcoin wallets, a wallet I have poured a lot into, is down over $20,000. My stock portfolio, yeah, that took a hit too. Over $10,000 gone in a flash, and you know what? I am not panicking. In fact, I am almost wishing it drops more. This week alone, I have already bought $50,000 worth of Bitcoin and index funds. For someone like me, who has made every mistake in the book, who has chased every shiny object, this feeling is a revelation. I am not usually one for doom and gloom, but these past 7 days in the investing world have been, well, let us just say very interesting. We have got Michael Burry, the guy who famously called the 2008 housing crash. He is shutting down his firm. He made a ton of money then, but he is just done. And then Buffett the legend himself, he has stopped doing his annual letters. That is not necessarily a bad sign, but people are whispering that it might mean he is thinking about stepping down. And if you look around, layoffs are happening everywhere, across so many different companies. It is clear there is a lot of fear out there. People are checking their portfolios every hour, ready to hit the sell button, ready to give up. But here is the thing, and I do not think enough people really get this. This is the opportunity. This is the moment we have been waiting for, even if we did not know it. A lot of people are going to let this slip through their fingers, let fear win. But for those of you who are not scared, or maybe you are scared but want some clarity, I want you to stop. I want you to really listen. I am going to show you how to use this potential crash, this downturn, to build real lasting wealth. This is not some theoretical stuff I am pulling out of thin air. These are the exact strategies I am using right now, while my own portfolio is taking a beating. Now, before I dive into the specifics, I have mentioned this before, the main reason I can invest so aggressively, especially when things are down, is because I have built a solid cash flow business. That is my safety net, my engine. I will give you some ideas for businesses you can start in just a few minutes. If you want a bit more direct guidance on how to make your first $3,000 to $5,000 a month online so you can break free from your 9 to 5, you can look into that. I've personally helped a few people this week land their first clients and get that ball rolling. Just a quick plug because that foundation is critical. So, let us get into the core concept. Why do crashes, these scary stomach churning events, why do they actually make people rich in the first place? Especially if you are in your 20s or 30s, you are in what we call the accumulation phase. You are not trying to preserve vast amounts of wealth yet, because let us be real, most of us do not have that much to preserve in the first place. Your goal right now should be to acquire as many quality assets as possible. Now, I need to be clear, this is not financial advice. I am not telling you what to buy or sell, but think about it. If you have nothing much to protect, if you are like me and barely scratching the surface of what you want to build, then why would you want assets to be expensive? You are not cashing out anytime soon. I get it, seeing your portfolio way up, deep in the green, it looks amazing on your phone, it feels good. I have been guilty of getting caught up in that vanity, but when you are accumulating, you should want everything to be on sale. You want to stack as much as you possibly can, whether you are into Bitcoin, traditional stocks, real estate. It does not matter. The principle is the same. The genuinely wealthy people I know, the ones who really understand how money works, they buy when everyone else is panicking and selling, and they sell when everyone else is euphoric and buying. That is not some catchy slogan on a motivational poster. That is literally how massive transfers of wealth happen. Right now, money is moving from the emotional, the impatient, to the patient, the strategic, those who have kept some cash on the sidelines, those who can remain still amidst the chaos. They are the ones who will benefit real wealth. Actual significant wealth is built during bear markets. During these downturns, you then realize that wealth, you see it grow exponentially during the bull markets. When things pick up again, you realize it when you are in your 50s or 60s, when you are ready to enjoy the fruits of your patience. Everyone wants to get rich when Bitcoin is hitting all-time highs and stocks are soaring. But the real money, the foundation for that future wealth, that is built right now. In these difficult times, your job in your 20s and 30s is to accumulate. The more you can accumulate during times like this, the wealthier you will be, even in just 5 to 10 years. Seriously, in 5 or 10 years, you are going to look back and kick yourself thinking, why did I not invest more? I promise you that. So strategy 1, and this is super simple, is dollar cost averaging, or DCA. I am a big believer in lump. Some investing when the opportunity is clear, but I also love having cash ready on the sidelines for moments exactly like this. If I had poured all my money into Bitcoin when I first got super interested, I would be down a ridiculous amount right now, and I would probably be curled up in a ball rethinking all my life choices. So, I am incredibly grateful I did not. I am grateful I kept that cash ready so I can get aggressive. Now my logic is this. If I believe Bitcoin was a good investment at $100 and I did nothing, then why would I not buy it at $80 or even $60 or $70? If I believe the SP 500 was solid at 6,000 points, why would I not buy it at 5,400 or 5,600? Whatever the current dip is, assets do not magically stop being good investments just because their price drops temporarily. That is the silliest thought process ever. If anything, they become even better investments, more attractive. So I am dumping a ton of money in. I genuinely do not care what the price does today or tomorrow. I am DCing through this entire thing. My personal rule, and this is where I get really aggressive, is if anything I am watching drops 1% or more, I double up my usual buy. If it drops more, I triple up. I will get stupidly aggressive. And you can look at the historical data, all the charts. Every single major market crash, without exception, has recovered and gone on to reach even higher levels, right? I am not saying it will be a perfectly smooth ride. There is always a chance everything could truly blow up. Yes, absolutely. But look at 2008, 2020, the dot-com bubble, Black Monday, the big Black Swan event in 1987. Every single one recovered. And the people who kept buying during those crashes, those are the ones who built generational wealth. They are the ones who can retire whenever they want, living comfortably. So just stop. This is your gentle reminder. DCA and chill. Stop checking your portfolio every single minute. That is just strategy 1, strategy 2. And this is crucial, is to build a cash flow business. This is where most people really mess up during a crash. This was my problem back in 2020. They see their investments falling, they freeze up, they stop taking action. I am glad I did not sell then, but I am still mad at myself for not being more aggressive, for not investing more. This is exactly when you should be working your hardest, building something. Market crashes expose something very important. People tighten their belts, they spend less, businesses struggle, but you need income, right? You need more income so you can keep buying assets while they are cheap, while they are on sale. So what kind of things can you start in the next couple of days, even over a weekend? You could start creating content. Literally, you could pick up your phone and start today. You could start flipping items on eBay. During crashes, people are desperate to sell things, so you can buy very, very low and sell for a decent profit when things stabilize. In my opinion, the absolute best option is an online service business. People still have problems and they still need those problems solved. Businesses still need leads, they still need automations, they still need landing pages, they need copywriting done. Whatever skill you have, whatever value you can offer, sell the hell out of that. Use the fear and uncertainty in the market as fuel. Most people let it freeze them, paralyze them, but you need to let it motivate you to actually start that business. That idea you have been thinking about for a while. Just do it, dude. Just start it. Who cares? If it is not perfect, cash flow will protect you from being forced to sell your investments at a loss, which I will talk about more in a minute. If you have extra money coming in on top of your regular job, you never have to touch your investment portfolio when it is down. You can ride out any storm. You can be stoic, just sitting there, calm and collected, while everyone else is freaking out, right? That leads us directly into strategy 3. Increase your income. You might not necessarily need to start a whole new business, but I am seeing people awaken to the reality of living paycheck to paycheck. That is the big issue if you are stressed about money right now. It is probably because your income is not high enough. There are only so many subscriptions you can cut, so many luxuries you can give up. So you need to fix this. This might sound a little counterintuitive, but crashes can actually be a really good time to ask for a raise at your current job when everyone else is panicking, unstable, and uncertain. If you are calm, reliable, and consistent, what does that make you? It makes you more valuable to your company. Companies need steady, dependable people during uncertain times, but beyond your main job, you need to be aggressive about finding side income. Every $500 extra a month, every $1,000 extra, that could be your entire investment budget for the month. That $500 extra a month invested consistently during a crash could easily be worth $5,000 or more in passive income in a decade or two. Your earning potential, especially in your 20s and 30s, is your biggest asset, way bigger than your current investment portfolio. So focus on increasing that, because then everything else trickles down. It rains down onto your portfolio. If you have no money to invest in the first place, none of what I am telling you even matters. You need money coming in. Okay, strategy 4, stay liquid. This connects to that funny real estate video I made a couple of weeks back. The absolute worst mistake you can make is panic selling. It is getting into a situation where you lock in your losses because you need cash, and then you miss the inevitable recovery. Do not do that. What you need to do is keep cash liquid. Make sure your emergency fund is solid. Absolutely. That way you are never forced to sell investments to pay bills or some other stupid unforeseen expense. That is how people destroy everything they have built. They need to pay off a car loan because they are underwater or cover an unexpected medical bill, whatever it is, and they end up selling their investments when they are in the red. It is like, dude, that is not the way. The only caveat I have to this, the only time it is truly good to sell some type of asset, is if you are investing in yourself. If you can use that money to make a higher, more fortunate investment in your own skills or knowledge, whether that is schooling to get a degree, a specialized program, whatever you need to invest in for your personal growth and future earning potential, that is understandable. But right now, cash is king. I am not usually the one to say that, but it is incredibly valuable. Not just for buying investments on the cheap, but for other opportunities too. Businesses might become incredibly cheap to acquire. You might be able to secure financing easily. Assets are literally on sale. People will have real problems that need solving, and they will pay for solutions. If you do not have a cash cushion, you cannot take advantage of any of what I am telling you. So keep at least 3 to 6 months of expenses saved up. That allows you to be opportunistic instead of desperate, twiddling your thumbs, and just hoping things turn around quickly. Dude, you should want things to be on sale for as long as possible. Strategy 5, level up your skill set. This almost goes without saying. But it needs to be said, everyone is doom scrolling, playing video games. I am even talking about Modern Warfare 2. I play that game less and less because I am trying to use that time to level up my own skills too. Use this time, this period of uncertainty to get better, to become more valuable. Market crashes are the perfect time for investing in yourself, just like I mentioned earlier. So, learn skills that can directly make you money. Sales, marketing, those are probably my favorites. But coding, content creation, understanding AI, just anything that can directly translate into increasing your income. The return on investment, the ROI for investing in yourself is infinite. It is better than any of those financial investments I am talking about, because you can use those skills for the rest of your life. Nobody can take what is in your brain, right? Most people waste these times worrying, feeling helpless, and they just freeze again. But smart people will use this time when everyone else is freaking out to become more valuable. And when you become more valuable, you get paid a lot more. And that is the skill you are going to sell anyway. Your enhanced value. So that way you are earning more, investing more, and accelerating your wealth journey much faster, which I think is absolutely crucial. Now, of course, you are probably going to have some objections. You are probably going to have some mental hurdles to get over. First, you are not actually losing money right now. You are buying things on sale. You have not lost anything until you physically press that sell button. Obviously, do not do that. Your Bitcoin has not disappeared. Your stocks have not vanished. You still own the exact same amount of assets. They are just showing a temporary loss on paper. And crucially, they are cheaper right now. That is a good thing when you are in the accumulation phase. Second thing, 10 years from now, I promise you, dude, you are going to wish you bought more last year. I took advantage of a $100,000 promotion for my brokerage. I honestly wish I had put in $300,000 or $400,000 because I would be up so much more now. Or even in April, I was such an idiot I put in, I think $40,000 or $50,000 then. I should have tripled and quadrupled up when I had all that money. I was an idiot. I wish I bought more. You are living in that exact moment right now. Please learn from my mistakes. And third thing, your net worth in your 20s and 30s, it really does not matter as much as you think. I know I talk about that stuff a lot, but dude, it really does not. Your trajectory matters far more. I would much rather be worth $100,000 and growing fast than $500,000 and being completely stagnant. So focus on the direction you are heading, the progress you are making, not just the current number. And again, separate your emotions from your money. Money is just a tool. Do not let it control how you feel, especially when the markets are volatile. And here is a big mistake to avoid. Do not panic sell. Do not lock in your losses and hate yourself later. Do not go into debt to invest. You absolutely need a cash cushion, okay? Do not put money into investments that you might need in 6 months or even a year or two. Only invest money that you can comfortably leave untouched for at least 5 years, okay? And please, do not ignore this completely. This is massive. So, a huge wealth transfer is happening right before your eyes. It is happening right in front of you. I want you to take advantage of this. Dude, again, this is not financial advice, but in 5 years, I guarantee there are going to be so many people saying, I wish I bought during that time. I wish I bought when things were bleeding as much as they were. And like I said, we might not be in a full-blown crash yet, but I really do think things are going to continue this way.